Okay, quick Wednesday morning radar update. Big gap up in small caps this morning. Small caps are on fire. 250s through the highs as well. 2 on the floor, 3 on the FTSE through the opening range. So DAX is a little bit range bound today, but risk is on. You know, these two risk on in the area we like to do business. FTSE 100, you know, that's not going to really help anyone in stocks, is it? It's just a mixed market. So let's move on from there. Lovely close in the US yesterday. Strong close, the S&P. Metals ticking up here. They've just been grinding off this previous move. Big move in copper there. Zinc basing out. Let's just quickly go and have a look at crude's just in that sort of mean. That's light sweet, sorry. Crude in that sort of little kind of pennant. It's actually trying to move higher, isn't it, today? Jury's out on that one. It's mean. It's right in the middle of the sort of trend channel at the moment. Let's jump and have a look at this what we call a swing kicker on gold. Active low, double bottom. Primary trend, the bigger primary trend is still intact, but it's kind of, you know, big move in gold. This was huge move in gold, 75% off the lows on this run, and it's just come back into sort of try and control my screen. Come back into sort of into line, hasn't it? Now, you know, big calls. There's nothing to say this can't go straight back up. There's nothing to say this can't go straight down. But I would also say there's nothing to say this one can't go sideways in a big range for some time. Maybe a year, maybe 2 years. You never know. You know, there's always a great story about gold. You know, you just got to be honest about it. You know, if you trade gold, that's one thing. If you trade the stocks, you know, I like to see the stocks in the screens, and at the moment, not that many of them. You know, we will see it when it's on, is basically what we have to say every time we talk about gold. Bitcoin, I think they've given up calling the top in this market. Absolutely nothing wrong with that trend. Normal action. Use a log scale. Get out of the, you know, the prediction business and use a log scale. 20-year TLT trying to pop there. We'll just have a look at dollar bull coming back in. So obviously that's on the other side of that seesaw is commodities. Moving on, let's look at pound US. We're in mean trend and we're trying to turn up. You know, for me, that's kind of where I like to do business, swing trading. The reality with currencies is the choppiness and the swings are. It's just not. You know, when you've got stocks where you can sort of look for the opportunity every day. In currencies, you look for the opportunity once every 6 months. So that is the, you know, the reality with the bigger picture swings on things like that. Into the large caps, it is 10 o'clock exactly, perfect timing. 23% to be on average volume. That will be 35% to be on conviction. We'll just buzz through these. WOSG still grinding higher. The only thing stopped me getting involved with this one was the you know, a little bit higher debt than I needed in my sort of life. But you know, it's still a fantastic move, hasn't it? Just buzz through these quickly because small caps are on volume today. There's a lot moving. Portfolio through highs again today. tick up in this one. Aerospace. CLG, obviously I've got a position in that one. I did it in order of volume today rather than in order of sector. I've got a position in KNOS as well. And over to the small caps. What did I say? Should have traded 23%. We've got a lot on volume today. In order of sector. This is a lose more scenario, no forward on that one. We had a talk about that one. Can't remember when it was actually. Was it last night or was it the last swing point we saw? Obviously we had a talk about that one on the last swing point as well. As we do with every stock, what goes through the screens. The way I screen on the evening, every breakout and every pullback reversal, in daily reversal from a pullback, hits the screener. Every night we screen the whole market. It's been a little bit quiet this week. I'm expecting it's after an absolutely fantastic week last week, and we put that down to just so many stocks moved out last week. No forward on these. ORPH is a return to growth apparently. It says 0.2 on it, but it's got good last quarter or last half on half numbers, whichever they are. I have a screen of what screens for the last. HZM. So, you know my sort of business in these kind of stocks. I prefer to sell to the moon people, and the moon, and it did get to the moon again here, and it wasn't much different from this one, but this was the little base. It's good action. It's good to see it can actually do a pullback, move to highs, do a pullback and turn up again. We saw it on the swing points, and they were high volume as well, so it is good to see that. Nothing here. XPD continues. It is now 100% out of the base nearly. 90 plus, give or take a bit of spread. Tick up in the forward numbers on that one. No forward. Oil and gas. War paint. Very small tick up in the forward numbers on this one. Turnover down slightly, so you can do the math and where did they scrimp and save. Yeah, not for me, but nothing wrong with the price action. RENE, so lose slightly more. REITs, obviously REITs have been doing pretty well, haven't they? Low beta. Crimson Tide, it's been a long time. Been good to me in the past though. Nice little run here. Sold to the moon, people, as you do. Rinse and repeat. It did. It came out of this little base here. We watched it on this swing point, and then it came out of this little base. But such a choppy vehicle when there's fantastic stocks out there. And there is one ECK. We have a position. FNX tick up, but probably decelerating on that one. Let me have a look. FNX. There you go. Wouldn't hit a GARP screen. And for the GARP style trader, it is a kid in a sweet shop kind of market. Adept. I'll just punch this one in. This is what jumps out at me here, the debt multiples. So, you know, you're taking that on, you've got to be sort of dig into that and ask yourself a few questions. GMR continues. This is a return to growth. It's extremely slim numbers and a little bit of a laggard in the space, but it's getting dragged along by the sector move, I presume. Also, the sort of, it is the one what's cheaper and probably little bit more private investor friendly for the price. But when it comes to it, GMR, the whole sector is absolutely knocking it. Let me just what's that next one? I don't know what this one is. Restaurants and bars, that one. The whole sector is knocking it out of the park. You know, positive, accelerating, huge earnings, and this one's, you know, it's expected to post a profit pre-tax, return to growth or post-growth. So doesn't look as though it's got any debt issues. Always dig into it. Can't have a peg ratio because we have no profit. But yeah, I can see, you know, this one's you can see what it's going up on. It's a laggard in the space, you know, but the trend is certainly huge, isn't it? Look at that. Always look at in risk multiples, you know. If I bought it here and I risked here, how many multiples of that, you know, can I sort of make? And that is that is what you get paid by, multiples of risk. As we say, percent it means nothing. You might have a 1% position and make 400%. You might have a 5% position and make 50%. You know, the percent is pretty meaningless. It's always the multiples of risk, especially if you use fixed fractional. So that is today's. The sun has come out. I'm going to step outside and get away from the screens. Fantastic. New portfolio highs again. Every day this week. Most days last week. I think every day last week as well. Okay.